Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Beijing Xunzhong Communication Technology Co. Limited Annual Report. Beijing Xunzhong Communication Technology Co. Limited offers a range of cloud-based communication services to various industries. The company's primary business segment is cloud-based communication services, which provides value-added communication services through APIs for messaging, voice, and mobile data communications. This includes Communications Platform as a Service (CPaaS) and Contact Center Software as a Service (CCaaS), catering to technology service providers, software companies, financial institutions, and telecommunications operators. In addition to cloud-based services, the company also offers project-based communication solutions that utilize software or hardware combinations to enhance connectivity for public sector customers. This includes municipal governance and safety projects. Furthermore, Beijing Xunzhong provides other communications services and accessories, such as specialized mobile phones for enforcement authorities, contact center outsourcing, and video conference solutions. The company's services are designed to meet the diverse needs of its clients across various industries. With a strong presence in China and a history dating back to 2008, Beijing Xunzhong Communication Technology Co., Limited, has established itself as a reliable provider of cloud-based communication solutions. Beijing Xunzhong Communication Technology Co., Limited, market capitalization of $4 billion, is materially smaller than most of its industry peers of roughly $10 billion. And Beijing Xunzhong Communication Technology Co., Limited, trades at a higher price-to-earnings ratio of 66 times and a higher price-to-book ratio of 4.08 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 43% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the extracted summaries. On one hand, several factors contribute to revenue growth. The expanding application of cloud technologies, increasing demand for cloud migration from downstream customers, and technological integration with AI and 5G are key drivers. Additionally, the deepening of digital transformation and accelerated expansion of cloud migration in China have also contributed to revenue growth. Furthermore, strong downstream demand for improving communication capabilities and increasing awareness of the importance of cloud-based communication services have driven growth. The Smart Communication Solutions segment has experienced a significant year-on-year growth of 247.67%, while the Project-Based Communication Solutions segment has also seen substantial growth. On the other hand, several factors contribute to revenue decline. A decrease in revenue from cloud-based communication services due to product mix adjustment and customer demand shift is a primary driver. The shift in customer demand from basic communication services to integrated solutions has also led to a decline in revenue. Furthermore, phasing out low-margin businesses has resulted in a decline in revenue from other communication services and accessories, with a year-on-year decline of 70.13%. The net income of the company underwent significant fluctuations between 2024 and 2025. Initially, it increased by $22,299,354.63, 44.3%, from 2024 to 2025, indicating a positive trend. However, this growth was short-lived, as the net income decreased by $20,475,397.16 in the subsequent period. Furthermore, when expressed in RMB, the net income showed a decline of RMB 25.67 million, 12.64%, to RMB 177.45 million. The profit margins also experienced changes during this period. The operating profit margin decreased from 56.6% in 2024 to 53.8% in 2025, while the net profit margin increased from 55.2% in 2024 to 57.1% in 2025. This contrasting trend can be attributed to various factors. Credit impairment losses and operating costs contributed to the decrease in profit margins. On the other hand, the active management of product mix and development of high-margin services led to an increase in profit margins. The reasons behind these changes are multifaceted. The exclusion of low-margin businesses from the product mix resulted in a decrease in revenue. Conversely, the strategic shift towards high-margin services contributed to the growth in profit margins. These factors highlight the importance of effective management and strategic decision-making in influencing financial performance. The company's operating cash flow has been a subject of confusion in the provided summary. Initially, it was stated that the company generated negative operating cash flow in 2025 and 2024. However, this information appears to be incorrect. Upon closer examination, page 2 provides a clear summary of operating cash flow, revealing positive values for both 2025, $1,234,119,421.19, and 2024, $1,102,111,219.11. This suggests that the company is indeed generating positive operating cash flow in these years. It's worth noting that page 7 mentions a positive net increase in cash and cash equivalents, but this is not an accurate representation of operating cash flow. Therefore, based on the reliable information provided on page 2, it can be concluded that the company is generating positive operating cash flow in both 2025 and 2024. The company's debt level and interest expenses have undergone significant changes over the past year. While total debt has decreased by a notable 24%, long-term borrowings have seen an increase of 99%. This contrasting trend is also reflected in lease liabilities, which have plummeted by 90%. On the other hand, interest expenses have experienced a decrease of $290,356.04, indicating that the company's financial obligations are becoming more manageable. In the recent financial report, two distinct trends emerged in terms of revenue growth across different segments and regions. On the positive side, the project-based communications solutions segment experienced a remarkable surge in revenue, with a staggering plus 247.67% growth. This significant increase is a testament to the growing demand for specialized communication services. On the other hand, the other communications services and accessories segment struggled significantly, witnessing a substantial minus 70.13% decline in revenue. This downturn highlights the challenges faced by this particular segment, which may require strategic adjustments to regain momentum. Management is optimistic about the company's future prospects. According to their vision, they aim to become a globally recognized AI-driven cloud-based communications solutions provider. To achieve this goal, they plan to implement strategies such as continuous improvement, innovation of services and solutions, and embracing AI in all aspects through a technology-plus business, dual-engine-driven approach. The company is confident about the significant growth potential in the cloud-based communications industry. They expect to expand into new markets, including AIGC and agents technologies, and integrate these with their existing communications business. Additionally, they plan to explore new growth opportunities, increase geographic coverage, and enhance penetration in Southeast Asia. That concludes the financial summary for Beijing Xunzhong Communication Technology Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.